South Africa's power roadmap has cleared a major hurdle. Cabinet has approved the Integrated Resource Plan 2025, the framework that will shape the country's future electricity mix and investment priorities once it's gazetted. The plan outlines an investment framework worth 2.23 trillion rand to balance supply and demand, cut emissions and lower power costs. It builds on the 2023 version with new projections for demand growth, generation capacity and renewable energy integration. Minister in the Presidency Khumbudzo Ntshavheni says the IRP 2025 will guide South Africa's transition toward a net zero electricity sector. The final policy is expected to be gazetted in the coming days. South Africa is at a crossroads. That's according to PSG. The Financial Services Group says reform-driven momentum is balanced against persistent structural challenges, and sustainable economic progress will now depend on bold reforms and professional management of both internal and external environments. The commentary comes alongside the firm's half-year results. In the 6 months to end August, recurring headline earnings per share increased by 21%, thanks to favorable securities market conditions. An interim dividend of 20 cents has been declared. That's up 18% on the prior period's payout. Premier is looking to acquire fellow food producer RFG. To do this, the firm has proposed a share swap, with one Premier share being exchanged for every 7 RFG shares. This ratio is based on a reference price of 22 Rand per RFG share and 154 Rand per Premier share. Premier will also pay a cash amount in respect of any fractional entitlement to its shares. Should the transaction go through, RFG will delist from the JSE. Premier says the transaction represents a good opportunity for both companies' shareholders, as the combined entity is set to generate annual revenue of around 28 billion rand and profit after tax of roughly 1.7 billion rand. DRD Gold has delivered a steady performance during its first quarter. In the 3 months to end September, the gold producer increased output by 2%. That's thanks to higher yield and strong prices for the yellow metal. Revenue rose 2%, while adjusted earnings before interest, tax depreciation and amortization edged up 1%. Operating costs increased slightly on the back of higher labor and winter electricity costs. DRD remains debt-free, ending the quarter with just over 1 billion rand in cash, which will help fund the expansion of the firm's Far West Gold Recoveries Phase 2 project. Vukile Property Fund has raised 2.6 billion rand through the issue of new shares after it increased the amount of its equity offering due to strong demand. The company had initially planned to raise around 2 billion rand, but investor appetite prompted it to lift the total, successfully placing about 124.5 million new shares, which represents 10% of its market capitalization. The shares were issued at 21 Rand 30 each. This represents a discount of roughly 5% to Tuesday's closing price. Vukile says the proceeds will strengthen its position for potential acquisitions in its core markets, South Africa and Iberia. Shares in cannabis company Labat Africa have soared. The counter closed 50% in the green. That's after a long-awaited trading update signaled a return to the black. Labat expects to post headline earnings per share of just over 13 cents from a loss of 3.9 cents previously. The update provides the first barometer of the company's health since December, when the firm published an annual report. South Africans spent an eye-watering 75 billion rand on gambling last year. The majority of that went towards online betting, which now makes up 60% of legal gambling revenue. This comes as the country is plagued by poverty and unemployment. The National Gambling Board has noted that recipients of social grants are using their meager income for gambling as they look for hope of financial relief. And South Africa has seen a small improvement in food security over the past year, but hunger remains a serious concern. Independent research commissioned by the Shoprite Group shows the country's food security index rose to 56.4 in 2024. That's up from 44.9 the previous year, reflecting slightly better access to diverse diets and school feeding schemes. Most provinces improved except the Eastern Cape, while the Free State had the lowest dietary diversity, with nearly half of households eating 3 or fewer food groups. Shoprite says the findings show progress is possible, but the group has stressed that collective action is needed to tackle hunger nationwide. In international news, Johnson & Johnson is now facing lawsuits in the UK, alleging its talc products, including baby powder, caused cancer. This comes as the company battles tens of thousands of similar claims in the US. Here's more detail in this package report.
Johnson & Johnson is facing its first lawsuits in the United Kingdom over alleged cancer-causing talc products. That comes as the drug maker fights tens of thousands of similar claims in the United States. Legal firm KP Law said it filed a lawsuit at the English High Court on behalf of 3,000 people who say that ovarian cancer or other diseases were caused by using J&J's baby powder between 1965 and 2023. The firm says J&J's talc products contained carcinogenic fibers, including asbestos, which is often linked to mesothelioma, a deadly form of cancer. The value of the lawsuit against J&J and a subsidiary of its former consumer health unit, Kenvue, is estimated at just over $1.3 billion. Kenvue said in a statement that J&J baby powder did not contain asbestos and does not cause cancer. J&J stopped selling talc-based baby powder in the US in 2020, switching to a cornstarch product. It did the same in the UK in 2023. The company has sought to resolve the tens of thousands of similar lawsuits in the US through bankruptcy, but federal courts rejected the strategy 3 times.
Meanwhile, TSMC, the world's main producer of advanced AI chips, posted a 39.1% jump in third-quarter profit to record levels that handily beat market forecasts, though U.S. tariffs could weigh on its outlook. Here's more detail.
Chip giant TSMC posted a record-breaking third-quarter profit, up 39.1%, smashing market expectations. But looming U.S. tariffs could cloud its outlook. Riding the AI boom, the company reported a net profit of nearly $15 billion, marking its 6th straight quarter of double-digit growth. Demand for major players like Apple and Nvidia continues to boost its bottom line. The Taiwan firm says AI demand is still strengthening and is higher now than it had expected only 3 months ago. That follows similarly robust outlooks from other major tech players, including South Korea's Samsung and European chip gear leader ASML, a big supplier to TSMC. Despite the strong results, uncertainty looms. U.S. tariffs imposed by Donald Trump's administration weigh on the outlook. Still, TSMC is pushing ahead with a $100 billion U.S. expansion. That's on top of $65 billion already pledged for 3 plants in Arizona, 1 already operational. TSMC shares are up 38% this year, outpacing Taiwan's broader market, as investors so far shrug off the tariff risks.